following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
All right, we are back. Let's talk futures. We have a very special guest, first-time guest, highly qualified. Tom Kloza is our guest, global head of energy analysis and the founder of Oil Price Information Services, LLC. Good morning, Tom. How are you?
Hey, I'm okay. Hot day. So,
and you mentioned you're in Florida, right?
I'm actually in New Jersey. I come up here for about 4 months. I live in Florida, but I'll stay away from there with the 100-degree heat indexes and the pouring rain for a while.
You know, I saw your tweet this morning. I loved it. You know, the definition of a trillionth, the time it takes for the light to change and the guy behind you to honk their horn.
In New Jersey, that's it. I remember watching automated car presentations, and they said when everyone has an automated car, 9 cars will go into traffic in sync. And I said, you've never been to New Jersey. That happens sometimes here as well.
Oh my God. That's awesome. That's awesome. So Tom, tell us a little bit about OPIS.
Well, Opus was founded in 1980. Back before that, I used to trade futures for a company called Oil Buyer's Guide. I had no business doing it, by the way. But Opus, follows everything from the wellhead to the pump. And really, almost all of the commerce in the country is based on numbers that we put together for about 400 terminals across the country. And the big 7 spot markets. There's the futures market, but then there's New York and Chicago and Group 3 and Gulf Coast, Northern and Southern California, and the Pacific Northwest. And, I remember Earth and space science teachers would tell me that weather is the uneven heating of the Earth. There's a lot of petroleum weather out there. You can see prices varying by anywhere from 20 cents to $2 across the country, depending on the local market.
So that's interesting you said that, because I'm down here in the what we call the Low Country now, in the Charleston, South Carolina area. I have a son in Indiana. I have a son in Arizona, and we have wildly different gas prices.
Yeah, you do. And mostly it's the taxes, but the entire business has become immensely more profitable in the last 5 years since COVID. The refinery margins, which used to be measured in like $5 and $10 increments, now can go, extra orbital to $30 and $40. And even the marketers who sell the gasoline, or the guy at the pump, at the pump, 40 cents is the new 20 cents. That's what the margin tends to be for retailers across the country. And there's about 160,000 of them. So they're doing quite well at the moment.
That's funny you should mention that, because you hear a lot about, well, these gas stations, these guys don't make a lot of money on the gas. They make it on the the Twinkies and the cupcakes and the Diet Coke.
Gasoline is magical now, and the biggest beneficiaries of the price wars and the notion that I saved money by going here are the companies like Costco, BJ's, and Sam's Club. People think that because they're 20 cents below the competition, they don't make money. The reality is, with 45 or 50 cent margins, you're 20 cents below the competition. You sell 1 million gallons a month, which is what some of them do. It is one of the biggest profit generators for those big boxes.
No, that makes sense. I'm a Costco guy, right? I'm the cheapest guy you're going to meet probably in this interview circuit. I'm a Costco guy for sure.
Yeah, I'm a Costco guy. I went there for a brisket last week, and the smallest brisket was like 23 pounds. So
wow.
Yeah. I'm a big fan as well.
Yeah. So, Tom, a lot of, we're a retail futures trading organization, and we talk a lot about WTI crude oil here, CME Group's futures markets, the main one. And we follow that a lot. And we get this weekly report every week, EIA, Energy Information Administration report. How impactful is that?
Well, it's very impactful. I mean, it's flawed, but all the statistics in oil are flawed, whether they come from private companies or public entities like the EIA. It is the best thing, we've got out there right now to sort of gauge where things are going. And right now it's very, very typical. The one thing that I would stress that I've noticed more, in the last 5 years of my career than let's say in the first 5 years is the seasonality in oil futures, gasoline futures, crude oil futures has really increased substantially. People might think it's a movie like a Tarantino movie or a Coen Brothers movie where there's a lot of twists and turns, but it's not like that. The futures market has become like the Hallmark Channel, where you pretty much turn it on, whether it's Christmas in July or Christmas time, and you know that it's going to abide to a certain extent by a real clear plot. And right now, the plot for the last few years is we get this second hump, of the Bactrian camel. We get it for gasoline, and we get it to a certain extent for crude. And some of it, if you think about it, it makes a lot of sense. Why does crude tend to appreciate in July and August beyond the influence of storms and so forth? Well, if you're looking at the Middle East and you're looking at the temperatures, I saw the horrible story about the Hajj yesterday and all the people that were dying in Saudi Arabia. The Saudis and some of the other Middle Eastern countries have a supply cut every summer. They need that crude oil to run the utilities and make air conditioning for the Middle East. So that's one of the reasons why we tend to have this second seasonal, and we tend to see prices move up in July and August. And I caught a little bit of what Anthony was talking about there, but I think that, I would be predisposed to think that we're going to get a second high for gasoline prices, a second high for crude oil numbers, very close to that April 12th high. And, it could be really kind of stirred up by what happens in tropical weather.
So, well, right now, so we had the EIA numbers released today. We had gasoline inventories was a 2.28 million draw, I guess, which was way off the forecast, don't you think?
Yeah, I think that was off the forecast. And that's why the demand number that came out with is about 9.4 million barrels a day. We think demand from last week to this week was flat, and last week, of course, it was just barely over 9. If you go back in time to 2019, this was a week that had almost 10 million barrels a day of gasoline demand. So I think it does prove that point that driving season for gasoline is more mythical than real these days. There's just too many people working from home. And then the idea of packing up all the kids in the station wagon and traveling to a hotel. Well, when hotels are $350 or $400 and eating out is $100, it tends to stunt that a little bit. And I think that's what we're dealing with now.
No, you nailed that part of it. It is traveling is expensive no matter how you do it, whether you're driving or flying. They're going to get you.
Yeah, well, I love those recreational fees they charge you for walking around somewhere. I was at a place in Austin recently. They tagged that $45 on. It's just like, what's this? But they do it.
Right.
So, and God forbid if you park, it's $60 overnight. You'd think that maybe Louis De Palma from Taxi is parking your car for you.
No, I hear you. So now the EIA comes out with a couple of different crude numbers, right? They'll have the general inventory number, which was a draw also,
Right.
but then they'll also have I think the Cushing inventories, right, which wasn't a draw this time. How do they calculate the difference there?
Well, Cushing used to be a big deal. It's not a big deal anymore because the Brent contract has the component of the WTI number at Midland in the Permian Basin. So that's going to have a lot more impact on prices. I rarely look at Cushing any day. these days, because unless there's a problem with containment there, or if it's going, back into the teens or something, it doesn't really have that much of an impact out there. If you were starting the futures contract all over again, you would start it in the Permian Basin, or maybe at, Magellan, East Houston or something. But you know the way it works in futures. We had a futures contract in 2006 where we had MTBE in the gasoline, but they still used it because it had all the liquidity. And, that's the issue that you have with WTI pushing as well. It is interesting now, one of the things I saw this week was that the Canadian price, the Trans Mountain is moving about 700,000 barrels a day out to the British Columbia. And we saw that discount for Canadian crude go from about $11 a month ago to close to $14. And that's probably a reflection of the fact that we're going to have a real unicorn in the Middle West. We're going to have the BP refinery in Whiting, Indiana, 440,000 barrels a day, is going to have a midsummer turnaround where they have to do the maintenance. You think about that, that's probably 1,000 people have to come in, crawling all over the refinery and making sure it's working right. And they're doing it in the highest demand month for gasoline of the year. So that
and Tom, how long will that take, out of curiosity, that effort?
They're probably going to be 30 or 40 days. And
Okay.
we think that it's probably motivated by problems that they had with power outages back in the first quarter. You don't try to schedule refinery maintenance in the middle of the summer. You have summer vacations to worry about. And literally these things can have 1,000 or more people crawling all over the refinery. So this is a real oddball, and it has the potential to, have an interesting, it's by far the most major refinery in the mid-continent. And it's going to be interesting, particularly if we see hurricane impacts from Corpus Christi to Pascagoula, Mississippi.
Yeah, no, my old stomping grounds, long time ago, I did some consulting work with Mayor Bursick, who's long gone, but it was all about zebra mussels and other Lake Michigan problems.
Right.
So, okay, so that's interesting. So let's talk about a little bit about the weather, right? So the weather is kind of a big deal. I just got an alert on my cell phone. Tropical storm Alberto forms in the Gulf of Mexico. It literally just came to my phone. I moved from Chicago to Charleston. I've only been here a couple of years, and so far, so good on the hurricane front, but I'm terrified.
Yeah, and you should be. I was in Fort Myers for Hurricane Ian, which was a Category 5. I've survived it. And it wasn't as bad where I was. God forbid if I actually had waterfront real estate down there. The thing to remember about hurricanes is that every hurricane that makes a landfall in the United States destroys some demand. It's the very rare hurricane that destroys supply, but it can have just an incredible impact. And if I were to show a slide to you of the difference between 2005, when Hurricane Katrina came short of New Orleans, and now, it would just be mind-bending. We export about 12 million barrels a day of crude oil, refined products, and LP gas these days, so that one can make the statement that the world's second most notable choke point after the Strait of Hormuz is the Gulf of Mexico. Think about 5 million barrels a day of crude oil going to the rest of the world, 1 million barrels a day of gasoline, 1/4 of diesel, and then all the propane and polypropylene. If we get a storm in the Gulf of Mexico, this is kind of a funny construct, but I say take the category storm and cube it, and that would be the impact, the minimal impact you'd see on gasoline. In other words, if you had a Category 3 that came ashore in Houston, it'd be 3 times 3 times 3, like a 27-cent increase in gas price. The other thing to remember as you go into storm season is you don't necessarily need a storm to make landfall to impact the market. Last year, and to a certain extent in some other years, we start to see the storm chasers come into the futures market. And, they've got the seasonal pattern of, gasoline and crude oil tending to have a second high, toward the end of July and August. But there's also an awful lot of people that go, I can't manage my business if I have a hurricane impacted. So they might buy some RBOB options, they might buy some WTI options, or in gasoline, they might do front to backs and figure out that if we do get a storm in the Gulf of Mexico, the backwardation is going to be extreme to where the August RBOB contract might trade for 20, 30, 40 cents above September. And I do think you're going to get this storm chaser action in the next 6 or 7 weeks, unless, and this doesn't seem to be in the cards, we hear that, formation in the Gulf of Mexico or in the Western Atlantic is not going to be likely. I do remember that happened in August of 2006, where all of a sudden it was an all clear for hurricane season, but it looks a little bit scarier this year.
Yeah, that's what they're saying. I don't know. I mean, me personally, I was lucky last year, no major impacts whatsoever. So knock on wood. But we have, some of my neighbors are old timers and they tell the stories, right? That don't, aren't good stories.
Yeah, the other thing is, refineries, even at the Gulf Coast, refineries there were made to operate when it's 95 degrees, maybe even the high 90s. But there are a lot of refineries in the US last year that really were coughing and wheezing during July and August because it was 100 and 105 and 110. We had that in the Pacific Northwest, 2 years ago. And refineries there can't run when it's 100 degrees outside. They have to cut because they're not made to run when the ambient air temperatures are that high. So that is something else to keep an eye on. That climate change and really severe climatological impacts can have a real sort of running impact on U.S. refining. And then overseas, we've got the wild card aspect of almost, every 3 days you wake up and you hear about drone attacks in the Ukraine against Russia. Now, earlier this spring, there was about 600,000 barrels a day of Russian refining was knocked out. There were some more drone attacks last night with spectacular fires. That's something we've never dealt with before. And, that could be a wild card that could change things as we go into this strong seasonal demand period.
And knocking out some of that production could take a long time to get back online, right?
Yeah, I mean, I don't think that Russia has to worry about an EPA and some of the environmental regulations, but I hope this isn't condescending, but I think, the engineers that we have at the U.S. Gulf Coast in the United States are really the best in the world at running refining. The other ones tend to be in the Middle East where they've got these spanking new refineries. So, you might see a problem in Russia as we get into next winter. And the world is dependent on Russian hydrocarbons, natural gas and diesel and jet fuel to a certain extent. Again, that seasonal tends to be middle of the winter that you really have the impact.
I see. Okay. So that's a factor. OPEC plus, what's going on there long term?
Well, as much as probably my little filibuster there sounds very, very positive for prices, I got to tell you, OPEC Plus has a real problem in the last 100 days of the year. Goldman Sachs came out with a multi-year study yesterday. It suggests there's not going to be any additional call on OPEC oil until 2027. That means that if they release additional oil, it's going to have a real impact. And when I was talking about the Hallmark Channel and how seasonal the market is, the Brent market and the RBOB markets, they really tend to sour from the early fourth quarter until, from the early fall until the dead of the winter. And I think that we're looking at appreciably lower prices if there's any leakage or any additional OPEC crude that goes on the market. The investment banks are all over the map on this with maybe a $75 to $90 idea for Brent and about $4 lower on WTI. But I really see 2025 and the last 100 days of 2024 as providing a lot of hurdles for the bull case in crude and the bull case in gasoline and probably the bull case in diesel unless we see more of those attacks by drones.
Yeah, it's the Wall Street Journal had an interesting article a few days back about the idea that maybe the Saudis and OPEC are more interested now, instead of the $100 crude, they're more interested in getting market share, just getting a bigger market share. And so they're okay with the lower prices.
Yeah, they are. There's the sense that if we get a red wave election or if President Trump gets reelected, that it'll be very, very bearish because there might be a rapprochement with Saudi Arabia, and there could even be a rapprochement with Russia. Interesting because, the gut reaction is that he might get tougher with Iran off the bat and tougher with Venezuela. But longer term, probably going to be tough to make a case for $100 crude.
So you mentioned Venezuela. By all accounts, they have the most potential of any country in terms of their inventory, their potential. Right. What's taking so long?
Doesn't look like anything's going to happen there. The Maduro government, they're having sham elections apparently, and I would think that we might get a little bit tougher there. It's a shame because there's no question, and the world needs more of that heavy crude. One of the problems for the gasoline market and the RBOB market, futures market, is there's a mismatch now between so much light, very, very sweet crude that turns out a lot of light ends, gasoline, propane, butane, that the world doesn't necessarily need. The world needs more diesel and jet fuel and gas oil. And, one of the cuts that the Saudis made was Arab Light. It's called Arab Light, but it's not light. It's pretty heavy crude, and it yields a lot of that middle of the barrel, which is what most people want. So as long as we have this impact with too much light, sweet crude on the market, it would tend to be a little bit bearish for gasoline prices and bullish for diesel prices versus crude.
So diesel, let's talk about ultra low sulfur diesel, right? The CME has a contract in New York Harbor, ultra low sulfur diesel. It used to be called heating oil. I guess they changed the name at some point a long time ago. But that, in my mind, we talk a lot about Dr. Copper kind of being kind of the measure of global economic strength or weakness. I like to think of ultra low sulfur diesel as that same thing for the U.S. It powers our supply chain.
Yeah. And I agree with your thesis there to a certain extent. And the last few weeks, it looks as though diesel demand is increasing a little bit. There are some things that distort the numbers. I mean, one of those issues is that we've got a lot of renewable diesel made from corn oil and tallow and animal fat and so forth. And, we're seeing diesel demand numbers which seem inordinately low. But that's because probably about 300,000 or 400,000 barrels a day of the diesel that gets supplied is not from fossil fuels, and it doesn't tend to be tracked by the EIA. But yeah, I would say to you that if we look at the next 5 years, we see gasoline demand in the United States is dropping off a little bit, but diesel demand looks as though it's going to move up. I'm sorry, that's the hound of the Baskervilles there.
No, that's all right. That's all right. Okay. But we don't have battery powered trucks, right? We don't have that yet.
No, so, and I don't think that's coming soon. And again, if you look at Russia and some of the problems we might have with Russia, I mean, that would be the product that doesn't get to market because of drone attacks and so forth. So it is an issue. It is an issue. But I agree with you. It tends to be one of the best barometers of how the global economy and the U.S. economy are doing. And right now it's recovering, but the number for diesel demand was probably over 4 million barrels a day for decades. And it's been struggling this year to get up to about 3.75. And renewable diesel, you don't want to talk about because that Everybody's trying to make it. They're all sending it to California, and there's too much of it at the moment.
Is it, soybean? I mean, what's renewable diesel?
It can be soybean based. It can come from tallow. It can come from used cooking oil, and it is a drop-in fuel, which has the same characteristics of a fossil fuel. But there's just too many companies that all think that we want to get on the bandwagon and make this. And the regulatory givebacks, renewable identification numbers, low carbon fuel credits, they've been shrinking. So, California, for example, has to do something, or else they're going to lose some of the new technologies that are developing these fuels.
Got it. Wow. Well, I'm so glad I met you, Tom. I'm going to pull up your website, Mission Control. If we could just kind of show OPIS website. And then Tom, I know you're really active, or not active, but you have a decent Twitter handle. I enjoy it.
Okay. Well, I try to behave myself there, but not necessarily all the time. So
yeah, you relatively speaking, you do a pretty good job.
okay.
Anyway, so here's the website, folks, if you want to look into Tom's company and his service. Tom, really appreciate your time today. Hopefully we will get you back on the show. Great information.
Check back with me in October, and I think it's going to be a different world, October, November, December. But I could be wrong.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.